The utilization of candlestick signals is extremely effective for showing when there's been a change of investor sentiment or a trend reversal. Today's positive trading in the Dow is not a candlestick reversal signal, just an up day and a downtrend. Now, it did occur right here at the 200-day moving average, but there's some very basic assumptions you can make when you see a positive trading day and a downtrend that's not a reversal signal. The logic says if this was some relevant reversal signal, the Japanese rice traders would have given a name and told us what it did and what the results should be. The fact that we're still below the T-line and stochastics heading down give the implication that this is merely just an uptrend or an up day and a downtrend. Now, look over here. This is another day that is not a reversal signal, just an up day and a downtrend. However, there's a relevant difference. Where the stochastics are heading down over here, stochastics are in the oversold coming up over here. Now, this still could imply that there'd be an uptrend, but not with the same probabilities as if this had been a bullish engulfing signal or even had closed lower and created a bullish harami. The fact that it opened higher above the previous day's open and closed above the previous day's close put it in a category of a non-signal. However, it did produce a bounce. But the relevancy right now of this candle is that it's still below the T-line and the stochastics heading down, so you have to be a little bit more careful. You wouldn't be going whole hog long until you see better confirmation. The same scenario can be applied to the NASDAQ. Again, this is not a reversal signal. To be a piercing signal, it had to open below the previous day's trading, which it didn't do. And to be a bullish engulfing signal, it had to close above the open of the previous day. It didn't do either. Now, it still shows some good strength. Not to say that there might be some more upside. But anytime you see a non-reversal signal and you see more upside, you just have to be a little bit more diligent as far as watching to see what happens when it hits the first resistance levels. And during this downtrend, it was pretty much demonstrating that this downtrend was probably just a pullback versus a full-scale reversal because the transportation index was not selling off. As a matter of fact, the transportation index did a good strong signal today, a left-right combo right off the T-line, implying there should be more upside. So if there's more upside in one index, that means the rest of the indexes, if they're selling off, probably is just telling you there's profit taking going on in specific sectors. The candlestick investor also has the benefit of being able to scan for high profit reversal patterns, where a recommendation on HCLP was based upon what we call the cradle pattern. You have a big downtrend, a big down day, and then notice what happened. You had 4, 5, 6, 7 trading days that were flat, indecisive trading. And then a big bullish candle out the other side, making this the headboard, the bed, and the footboard, or the cradle, hanging down between two trends. What usually occurs on this side is a good strong uptrend, kind of offsetting this downtrend. Analyzing the graphics of human nature, such as this flat, indecisive trading, and then the bullish candle, allows for the identification of high profit candlestick reversal patterns that are not only going to produce a bullish uptrend, but the magnitude of return is probably going to be a lot more excessive than just a mere uptrending stock. That'll be it. We'll see you in the chat rooms.